What's going on, everybody? Welcome back to my channel. So I haven't posted for a little while, just took a little break dealing with some personal matters, but I'm now back and I'll be delivering 3 YouTube videos a week for you. Just so you know the schedule, they'll be posted on Monday, Wednesday and Friday. I will up the ante again as time goes on, but for now that will be the schedule. So I hope you enjoy the content and you can join me here for that. So without further ado and all the riffraff, we're going to be talking today about thought process, multiple time frame confluence, and really learn how to figure out what is actually happening. Now, the impulse to jump into a trade can be very strong, or should we say the urge, whatever you want to call it, is very strong. And sometimes we need to really hone that in. So let's take a look at one example today, and we're going to go into a lot of detail. So I hope you're ready for this. I'm not going to give you the answer to this pattern, but as we're going through it and I'm talking through my thought process, try to figure it out and see how it lines up with your thought process. Because with any trade we take, we need to be making sure we are building a story. And for every trade we take, there should be a beginning, a middle, and an end. So let's look at the beginning of this. First things first, we can see that the structure of this market is to the upside. Now, I just do this visually, and if you're new to trading or been trading for a while, and sometimes you're on the charts and you start to see sells and then buys, sells and then buys, drop a little arrow in there and just remind yourself what it is you're actually looking for on this chart. Now, I'm not sure if I just said sells for this pair. We're definitely looking for buys, as we can see the structure of the market is to the upside. Next thing we need to be doing is we need to be identifying our structural levels. First and foremost, we'll take our structural high. Now, this is very important because any trade we take as a buy, we need to make sure that we have enough range to get to break even or at least manage that trade before price gets back to a key level. Now, what's the reason for that? Well, price may not be able to break above this structure. And if price is not able to break above this structure and creates patterns like double tops, triple tops, false breakouts, then we can find ourselves in a position where we take this buy and guess what? We don't get it to break even. And my usual rule of thumb when I'm taking any trade is to make sure that I have at least a 1-to-1 risk to reward ratio. So as you can see here, whatever this is, 153 pip stop loss, 153 pip target. This could be 15 pips, 15 pips. Just make sure this is 1-to-1. And the reason for that is because if price is moving in your direction to the downside, you can lock it in. And the whole point in taking this trade is just to expect that the market will continue to push down. If the market gets to 1-to-1 and then now you allow the market to start pulling back, coming back to your stop loss range and stopping you out, you're just wasting time in that trade. Granted, it needs to breathe, but let's be realistic. The trades that you're going to make the most from are the trades that are going to go in the direction you expect it to go, which is down. So if the market gets to 1-to-1, for me, I found that as the sweet spot to lock your trade in and then allow it to play out. So enough of that theory, let's move on to the focus on today's session. So now we've marked our key level at this structural high. We do identify that the structure of the market is pushing to the upside, and with any uptrend, we look for higher highs and higher lows. It's as simple as that. So now we've got our higher high as our key level, just to make sure we can check our range. Let's mark the higher low that we're identifying here. Now, this is clearly a higher low based on visual perspective. We can see the market's pushed up, made a higher low, pushed up, made a higher low, pushed up, made a higher high, made a higher low. And now what are we expecting the market to do? We're expecting the market to make a new higher high. So based on that theory, what we're going to be doing now is seeing how the market reacts to this level. So if we plan to take this trade, let's say we plan to take it now at this level, do we have a 1-to-1 risk to reward ratio with our stop loss below this key level? Well, not really. We could stretch it, we can make it work, but not really. Second thing is when we're looking at this, we don't have any wick rejections to indicate continued bullish pressure. We do have a strong bullish candle to the upside, but to be honest with you, it's not very convincing. Now, if this was the previous higher low and we was expecting the market to continue to push to the upside, then in theory, we should have seen this market push up, but it hasn't. So this is indicating something here to us. There is still bullish pressure present in this market with the previous behavior of the last candle, but at the same time, we're starting to see a depletion. We're not going to rush into any sells or reversals. We're just going to wait patiently for the market to build up. So what are we going to do in this instance? Well, we're just going to keep pressing next candles, and we're going to wait for the market to tell us what it wants to do. Now, as you can clearly see here, the market is moving sideways. Now, this is alarm bells. There's a strong uptrend that we're trying to follow here, looking for the higher low to then eventually take a buy for that higher high. At the top of this uptrend, we can see prices starting to top out. The bullish pressure is depleting. We don't really see the bearish pressure yet, but we can get an idea that the bears are potentially stepping into this market. Otherwise, we would have seen this rally by now, or at least start to see it push to the upside. So for that reason, we can start to anticipate what? We can start to anticipate a range. So for that reason, with a range, what we're looking for is just simply for the market to do one or two things. It's either going to break to the upside, we look for the retest and continuation, or break to the downside, look for that retest and that continuation. If this pattern doesn't develop, then we don't take a trade. Because again, now if we're looking for the buys, we don't have enough range. Looking to sell is just suicidal because the market is still to the upside. So we're still waiting for more evidence. So let's continue to push the next candles and see what's happening. We have a strong push to the upside now, but look what's happening. We're reacting from this level. We can start to see here prices made a structural high. We're reacting to that structural high. And if we mark these two areas here, we probably call this a double top. Now, we're not going to sell this because the market would need to break this structure in order for us to get a good risk reward ratio. So we'll just continue holding and wait to see what happens. Again, the market has attempted to push to the upside, as you can see here, and look what's happened. Now we have two 4H candles with wick rejections and a failure to break above the structure. So now we're starting to develop a true range here. We're bouncing from the top, bouncing from the bottom, and now we're failing to break the highs. So we have to be patient in this instance. Well, now this candle's a bit random, but doesn't matter. We can see it attempted to break to the upside. So this would have been the new higher high if we did close above this structure. But as you can see here, price has failed to close above. And with it attempting to break above this structure, look what we see here. It's broken back into this range, back down to the downside, and now we're getting reaction from the range that we have drawn in here. As we just have to mark our structural highs and lows, and we just need for this to clear up. Remember, the two scenarios we're looking for is for a break to the upside retest continuation or break to the downside retest continuation. So let's continue to just see what happens. I do not care now what happens with inside this range. I just need price to break either to the upside or to the downside, and I need price to leave this area for a period of time to indicate that sell pressure or that bullish pressure, and then I'll be patient enough to wait for that retest. Now, there is something that is happening here, but I don't want to get too technical about this because it might confuse some of you. But notice we have a structural high here. At this structural high, look what's happening with price. We're making a lower high. We've made a lower low of the previous structure, and now let's see what happens. You see this? A new lower high. Now, again, I don't want to get too technical about this. This is tradable on lower time frame analysis using multiple time frame confluence. But let's just wait for the true confirmation to develop on the 4H. So now we're not going to look at this as a break. Even if this is the break, this is fine. But remember what I said. We want to see true directional bias and the momentum shift, which means price needs to leave for a period of time before coming back. We're not looking to get into this trade aggressively, and we're certainly not looking to be the first into this trade. We're just waiting patiently for true directional bias. So let's continue to see what happens. Now, this does look like a retest for sure. If we're to mark this level and go down to our lower time frames, we'll be able to see the break of this structure. So we could view this as a retest for sure. We'll just mark this level here and scale down to our hourly time frame and see what's happening. So as you can see on the hourly time frame, we do get a trend into the downside because all time frames trend depending on the candle movements on the higher time frame. We can see price came back into this area that we marked on the 4H, and you can see multiple time frame confluence here with wick rejections, price failing to break into this structure. We have momentum shifts, and you could have looked for some sells here. But let's get back to the 4H and take a look at this because this is what we're focusing on. Now we see prices broken this range, and what we're now going to look for as it's left this area for a period of time is just for price to come back to this level and show us strong evidence of bullish pressure into this structure and then eventually a depletion. So here you have it. Strong bullish pressure into this level here. We now have a depletion with this wick rejection. We don't want to take the trade now. We want to see the market at least react to this another time and then look for a potential trading opportunity. Now, remember the structure that builds for a downtrend. We have structural lower lows, lower highs, lower lows. If we have a ranging market, then this is an area where price has not made a decision where the directional bias is going to go, whether buyers are taking profits, sellers are stepping into the market, or whatever else is happening in the world. But what we want to see is the market break, retest, and then look for that continuation. So now we see the break, now we see the retest. We want to see the market continuing to fail to push up. Now, if we identify the structure of this market, what we can see now is we can see a structural high, lower high, lower high, lower high, and this structure here you can call a double top or a lower high of this previous structure, whatever you want to call it. It's completely fine. And if we remove the consolidation, look how the market's moving to the downside. Now again, we don't want to be first into this market, we just want to see what the market's doing. Now we have the retest, 8 hours worth of information indicating failing to break up, and now we have a bearish candle to the downside. Now what we can do in an instance like this is we can place a sell stop, we can place our stop loss above the structural high, and what we do with a situation like this, just to make sure we're on the right side of momentum, is we wait patiently for the market to 1, move in our direction, or 2, to go back to the upside, which means we don't get triggered in prematurely. So the sell stop will be placed here. As you know, with the strategy that I use, I go for a 1 to 3 risk reward ratio. So it'll look something like this. And now there's 2 options that's going to happen. Price is either going to continue pushing to the upside and break back into this consolidation and take out its own previous highs, or the momentum shift is going to continue in my direction back to the downside. And if it does, then that's when I'm going to be triggered into this trade. So let's just recap this before we continue and take this trade. And let's figure out what was the beginning, what was the middle, and what was the end. We can clearly see the market structure was to the upside. So our bias was buy bias. Now, when we're studying this, the beginning is identifying what structure is doing before we plan to take a trade. Now, over the process of watching how this market played out, we started to identify that the market was moving sideways and it was ranging. Price wasn't able to break the structural highs, neither was it able to break the structural lows. So what we started to gather was that off the back of an uptrend, bears, or bulls should I say, are either taking profits, bears are definitely stepping into the market. We could see a reversal as price may be topping out. But we're not going to look to take sells at the top. What we're waiting for the market to do is start to break its own structural lows, get out of this consolidation, leave for a period of time to indicate that continued bearish pressure, and then come back to a key level where we know the market is respecting before we take a trade. So the whole process of this trade has developed in the beginning. Now we're at the middle stage where we're identifying what price is doing at these key levels, building up enough confluence, evidence, and confirmation to confirm why this will be a good setup. And now we're heading towards the end of the trade. The end of the trade is this. We place our trade, we set our risk, we set our reward, and we let it play out. The end result will either be one of 3 things: a winning trade, a losing trade, or a break-even trade. So now let's play it out. We'll press play on this one and see what the market does. So we can see the momentum is starting to shift in a direction. We're now triggered into this trade in line with the overall analysis that we've done on this time frame. We've looked and seen that the bullish structure is now depleting. Bears are stepping into the market. We had a consolidation area in the market where price is failing to break, and eventually we got that break below structure. Once price broke that structure, it left for a period of time, indicating continued bearish pressure, came back to that structure level for a retest, indicating a fail to break back into structure, continued bearish pressure, and now we took the trade based on all those confluences. As I said, our story lines up, beginning, middle, and now we're waiting for the end to see what happens. We're not going to get rushed out of this trade, regardless of what it's doing now. We just let it play out, and as you can clearly see, we win the trade. So this is how I break down every single trade that I take. I think about the behavior of the market, how structure is moving, how price is coming back to key levels, waiting for the pullback, waiting for evidence with wick rejections, strong bearish or bullish candles, and then I'm just looking to take the trade with momentum. So I really hope this was helpful for you. I hope you can find it useful for your trading. And just to let you know, no matter what time frame you're trading, what pair you're trading, this will work. So as I always say, if you've enjoyed this video, make sure you smash that like button, subscribe, and until next time, take care for now.